So the latest decision on the repo rate will be the key focus this afternoon, as analysts are expecting another hike despite rising global and domestic inflation. This follows the first Monetary Policy Committee meeting that took place this year. Tumisang Ndlovu is our reporter watching the story. She joins us now live. And Tumisang, I wonder if it's a far-gone conclusion that we will see an increase later this afternoon, and if so, by how much?
Thanks, Ayanda. The consensus from most economists is that South Africa could see the interest rate rise to about 4%. Well, that is if the Monetary Policy Committee meeting decides that it increases rates like it did in November last year. But for more on this, we are joined by economists at the Dango Consulting Group, that is Chifipa Mango. Chifipa, do you agree with the general consensus?
Well, I definitely agree with that kind of movement of at least 25 basis points in terms of movement towards interest rates. But it will be done under an environment where, of course, intense debate around it because of what's happening in the global economy. What we've picked up is some countries, for instance, are keeping a hold on interest rates, which is like, for instance, the USA. In other countries like China, they actually reduced the lending rates by 10 basis points. While we're looking at countries in the UK, for instance, they actually increased by 15 basis points. So it's a mixed view of what's happening in the global economy. But most definitely, I think the Reserve Bank will be looking at from the point of view of what is actually monetary policy guidelines, which is to fight inflation, or to contain inflation. Currently, we're seeing a challenge in terms of inflation actually increasing on a monthly basis, standing at 5.9%. So it's kind of reaching at the upper end of the monetary policy target guidelines. So the environment points to a 25 basis point in terms of interest rates hike. But I think from the consumer point of view, we feel that no, there could be a distraction in terms of consumer patterns going forward.
It's going to be quite an interesting one because inflation at 5.9%, too close to the Reserve Bank's target, and for consumers it becomes a concern. Fuel is actually what is driving the inflation and the food basket going up. But would it be the right time for the Reserve Bank's Monetary Policy Committee maybe to try and mitigate the 25 basis point increase that we saw in November? Many analysts have said that they may have been too quick to pull that trigger.
Well, it's an interesting debate, which I think in most cases is guided by the environment in which we are facing. There is a mandate which the Reserve Bank has to follow, and that mandate is very clear around protecting the value of the currency, at the same time also ensuring that no inflation is actually contained. So those guidelines are what guides the Reserve Bank in terms of what they should do and what they should not do. But I think from the advisory point of view, some of us would actually prefer an environment in which there is a hold in interest rate at this point. But we don't have that influence because the Reserve Bank is an independent institution and it continues to be independent in terms of their operations.
Is there justification for a stay this time around with the repo rate sitting at 3.75%?
There is some slight room to it, but as I keep on saying, inflation is rising. But then I think I want to bring an interesting debate to say, does the Reserve Bank always have to increase by 25 basis points? Because we're seeing countries which are increasing by 15 basis points, China reducing by 10 basis points. So 25 should not be only the number which the Reserve Bank can use. Maybe we need to look at bringing a debate to say, be mild, take an approach which says maybe 10% basis point can also be an answer in this time.
That's the sentiment at this current stage. We'll be bringing you more coverage. Back to you in studio.
Tumisang Ndlovu, thanks very much indeed. Tumisang live to us there from inMidrand in Johannesburg.